Hi, my name is Paddy Hirsch. I'm a senior editor at Marketplace, and today I want to talk about shadow banking. Is it something that involves ninjas? No. But it is something that's concerning the government because the Treasury has put together a plan called the Term Asset-Backed Securities Lending Facility. Actually, it's been around for a little while, but it's really starting to attract some attention now. And that plan is designed to kind of bail out the shadow banking system. So what is the shadow banking system and why is it so important? So it acts in parallel to the banking system itself, the banking system proper as we understand it. So how does it work? Well, let's use an example. Here's our friend Bruce, okay? And Bruce wants to go out and, like many good Americans, wants to go out and he wants to buy a home, okay? So the first place that he goes to get the money to buy the home is down the street to his local bank. So here's our bank. There it is. And at the bank, people are very nice there, and they say, "Oh, okay, Bruce, you're a good man, and you've got a good credit rating. We can give you a loan at, say, 10%. Okay, so here's his rate at 10%. But Bruce thinks, "Oh, I'll shop around a little bit, see if I can get a better rate than that." And because there are various places that he can go, and he can look in what's called the shadow banking market. Now, we've all heard about these companies that provide loans to homeowners that aren't actually banks. These people, and we're not just home loans we're talking about. We're talking about credit cards and car loans and all the rest of it, student loans. They're not banks that provide these. They're part of the shadow banking system. So Bruce goes to his, and let's call this company Nationwide. Okay, so he goes to Nationwide, and the Nationwide says to him, "Okay, we'll make you a loan at, say, 9%. Okay." So here we have the shadow banking system, and here we have the banking system. And what difference does it make to Bruce? Well, at this point, not that much. Bruce is really just interested in the interest rate. Whichever one he chooses, he's going to be getting the same amount of money, although obviously with the variance in interest rates. So he's going to be looking for the best rates, but essentially his relationship is going to be the same. He's borrowing money, he has to pay it back with interest over a period of time. So why are we so worried about the shadow banking system? Well, the best thing to do is to have a look at the nature of these two systems, and then we can see where the dangers are and where the concerns lie. So a bank does business the traditional way. People save money at the bank, so money goes into the bank, and that money that goes in, those deposits, the bank pays a certain amount of interest on, say 2%. Okay? Then it takes the money and it lends it at 10% to people like Bruce. Okay? And the interest, or the spread that's made in between, this 8% that's made in between, that is the bank's profit. Okay? Which the bank does whatever it does with that money. Okay? Very, very basic. What about the shadow banking system? Slightly different. People are investing money and people are borrowing money via these people like our company Nationwide, but in a slightly different way. Okay? Whereas in the banking system, Bruce's loan generally is kept on the books of the bank. Okay? That doesn't happen with the shadow banking system. What happens is many people like Bruce, say there's 100 people like Bruce who've borrowed from Nationwide. So there's 100 times Bruce. Okay? Lots of these mortgages that they've now got on their books here, that Nationwide has put together. What Nationwide does is it securitizes these. Okay, it bundles them up. You've heard of that term, and it securitizes them. It turns them into bonds. Okay, so say we have our AAA bonds and AA's, triple B's, double B's, and it goes out to pension funds and other types of investors, hedge funds, all the rest of it. So our funds out here, our investors. Whoops. It goes out and it says, "Hey, you guys, you invest money in these." And that's how the money comes into Nationwide. So the funds go, we'll take AAA's at, say, 2%, AA's at 3%, triple B's at 4%, double B's at 5%. Okay, so these are the interest rates based on the risk in this securitization instrument. So this is the securitization process. And I've done several whiteboards on this, which you can check out on the page. So essentially, this is the way the money flows in. The money flows in via these bonds here from the investors, and then it flows out to borrowers like Bruce. Okay? So obviously a different system. But what's the fundamental difference here, aside from that difference that I've just pointed out in terms of the way the money is invested? Well, one of the really big differences is in the government involvement. Okay, now banks have been around for a long, long time. Okay, and in fact, since time ad infinitum. But over the years in America, the government's gotten worried about the banks because we've had various sort of crashes and the rest. So they put in a system of regulation. Okay, so we could call this regulation, I guess you could call it a safety net. Okay, so there's a nice big safety net sitting underneath the banking system, and the banks have to accord to it in order to make sure that they're safe. And there are things like capital adequacy, which means that you have to hold a certain amount of money on your balance sheet, depending on how many loans you have. And what that does is it makes sure that you're liquid in the event of a disaster. And there are other kind of checks and balances that are put into a bank's business that act as a safety net. So if things go wrong with the bank, then you're caught and you're safe. I've had a lot of problems with the banks in the past this way. But what about on the shadow banking side? Well, no regulation, or at least very little regulation. So not much of a safety net there, not much of a safety net at all. So why is this such a problem? Well, the reason it's such a problem is that the banking system, over the years, as the economy has gathered pace and more people want to borrow money to do whatever they want to do, whether it be to go to school or buy cars or buy houses or whatever it may be, the banking system hasn't had the capacity to be able to cope with that demand. Okay? And what has happened is that, as the sun has set, if you like, on the banking industry over the last few years, the shadow, that the bank has cast, because securitization's been around for a while, but the shadow that the bank has cast has become a lot larger. Okay? Now the shadow's awfully large. Okay? And in fact, according to some measurements, the shadow is as large as 60% of the business of banking. Okay? So banks lend around 40% of the money in the economy, or did before the credit crisis hit. The shadow banks, the shadow banking system, was responsible for 60% of the loans. So now you're starting to see the scale of the problem. All right? Companies like Nationwide, these shadow banking companies, have been responsible for so much lending that they've become a key part of the economy. In fact, in many ways, you might say the linchpin of the economy. So if they go down badly, then suddenly you've erased a large proportion of your ability to lend to people, and therefore people's ability to buy things, and therefore stimulate the economy, because there is no safety net. The shadow banking system just goes straight through in craters there on the ground. The reason that's happened is because people have looked at these notes, these bonds that they're spun off from these securitized instruments, and they've said, this is toxic waste. We can't find a way to price this stuff. We don't want to buy it. We don't want to touch it. So if nobody wants to buy any of these bonds, and there's no more of these new securitization vehicles being created, then suddenly 60% of your lending business is gone. So now you can see why the government's getting worried, because its plan is to get the economy moving again, but people need to be able to borrow in order to do that buying. So what's this TALF thing, this term asset-backed securities lending facility, supposed to do? Well, the government's talking about getting people involved to buy these bonds. It wants to create almost artificially create a market for these bonds, get people buying them again, get people interested in buying these bonds again, and thereby rejuvenate the market, get this shadow banking market moving again. It probably won't be as large as 60%. Who knows? It may only be sort of 20% of the market, but they need to get it moving again, because they need to get people like Bruce back in the stores, back on the lots, back into school, borrowing and stimulating the economy, keeping people employed. That's what the government's plan is. That's why the shadow banking system is essential to the government's plan, and why the term asset-backed securities lending facility is so important. Because if the shadow banking system doesn't exist and we can't keep the economy moving, it's going to leave everybody, so the government thinks, very badly, needing a drink.